How will distribution change in lending in the next 5 years? I think this is probably the biggest area of change for lending outside of the incumbent tier 1 banks over the next 5 years. The market's going to become more open, more broad, as more lenders have access to more data, as technology allows them to get to more customers. There's going to be more choice. Customers are going to be able to move outside of their own banks and acquire products and services that wouldn't have been available to them outside of a current account environment. So I think real change in that space, and the winners will be the players that adapt to that quickly, find those data sources and productively move them into their credit strategy.
Distribution will change over the coming 5 years, for sure, but the customer will still determine where and how to be met with seamless channel integration.
So I think it's a really good question around distribution. And I think I can only sort of reflect on what's happened within the journey that we've been on over the past few years. Business lending from a Barclays perspective is limited to 25,000. But what we've seen, our capacity inside our channel is that for that scope, it has grown year on year and doubled year on year. So we're now in the sort of space where digitally within that scope, it's in an excess of 30% of the channel share. So from single figures probably 2-3 years ago, it's grown to that size. Now I think that for me, we have a good customer experience in that journey. It's very slick, it's very end-to-end, but I think that there's also an appetite to increase that. And I think that for me, within the space between 25 and 100, there's an opportunity. I think that potentially customers are going out to other providers in that area that we could leverage, and we can grow the book for Barclays, but also as a consequence, be in a position where the digital journey grows and benefits us.
Distribution will change over the next few years by the timescales becoming driven by the customer's requirements rather than by the lender's supply chain and the blockages that using conveyancers and valuers can have in that overall timescale. I think that will be one of the most significant changes that we'll see.
I think distribution is probably going to see the biggest change over the next number of years. I think it's a lot of the banks and a lot of financial institutions, like it or not, are going to have to move away from their branch-centric view of things right now. And I think most financial institutions really are already grasping that and are moving in that kind of a way. But the distribution model that's there at the moment is inherently broken. We know that, and technology is really proving that more and more virtually every day. I think the distribution model particularly around identification and verification, just isn't working. I think from a customer perspective, it isn't working. And I think the customer is going to drive the regulatory change more and more. Even in the quite short term, I think we're going to see that happening.